Hi, and welcome to another edition of CMS Forex News. I'm Christina Robinson, and today is Thursday, January 31st, 2008. There's a slew of fundamental data today. First, in Japan, the manufacturing sector in December maintained November's pace with a manufacturing PMI of 52.3. Forecasts had anticipated a slight fall. In a second release, average earnings year over year fell 1.9% in December, harder than forecasted. In Germany, retail sales declined 0.1% for December and were down 6.9% year over year. The results were poorer than anticipated, showing that the Eurozone countries felt the strain of financial volatility and credit crunch during the fourth quarter. Continuing in Germany, the seasonally adjusted unemployment rate decreased to 8.1%. According to a preliminary release, inflation to consumers cooled, posting a negative 0.3% monthly change for January. In the Eurozone, the unemployment rate remained at 7.2%, and the preliminary estimate of annual inflation for January increased to 3.2%, above expectations of no change from December. Turning to the U.S., the number of Americans filing first-time claims for unemployment benefits surged by 69,000 to a 27-month high last week. After several weeks of better-than-expected figures, today's data provides evidence yet again of a weakening job market. Personal spending increased 0.2%, the slowest rate in 6 months, even as personal income notched up to 0.5%. Consumers are spending less as housing and stock prices are falling. Costs of fuel is continuing to rise, and credit is becoming harder to attain. The core PCE price index, a favorite measure of inflation for the Fed, remains steady at 0.2%. In a separate release, the employment cost index remained at 0.8% for the fourth quarter. The Chicago manufacturing PMI decelerated to 51.5, adding more evidence to the possibility of a recession. Finally, in Canada, the monthly measure of GDP rose 0.1% in November, lower than forecasts. Output of the services industries increased while the production of goods decreased. The dollar-yen pair had been falling since the Fed cut rates yesterday as global markets were generally lower overnight. The pair hit a low at 105.71 following the poor jobless claims data from the U.S. Equity markets in the U.S. recovered, however, as the day continued, and the dollar managed to rebound and pare its losses from earlier in the session. The euro-dollar pair set a high above 1.49, but fell back down following the German retail sales data. The pair found support at the 1.48 level, which is where the pair was at prior to the Fed's announcement yesterday. By 2 p.m. New York time, the pair had climbed back near the 1.4850 level. The U.S.-Canadian dollar pair rose in favor of the greenback as earlier gains were accelerated following the poorer-than-expected GDP from Canada. The pair climbed 170 pips from yesterday's low near 0.99, broke above parity, and then receded. The week will end with data on manufacturing sectors from Australia, UK, Germany, the Eurozone, and the U.S. Also from the U.S., we will get the important employment situation for January and the UMich consumer sentiment figures. Canada will reveal inflation faced by producers and the price index for raw materials. And that's it for today's news. Join us again tomorrow as we wrap up the week right here at CMSFX.com.